Good morning, namaste. As usual, we are again back Saturday, 11 a.m. And today we have with us CA Anand Sonbadra, a senior partner of AAA Insolvency Professionals LLP. And the subject that we are going to discuss today is the avoidance transaction and improving outcomes. So this is a draft discussion paper which has been brought by IIIPI, the Insolvency Professional of Institute of Chartered Accountants of India, where we all are member. So in this draft discussion paper, the IIIPI is trying to focus on the challenges faced by the resolution professionals, committee of creditors. The efforts are being made and the outcome is not as expected. So this particular discussion paper, draft guidelines, these are all for the purpose of improving the outcomes of the efforts that we make for avoidance transactions under section 43, 45, 49, 50, and 66. So kind of guidelines, kind of conceptual clarity that we will discuss today. And the basic objective is that the IIIPI is asking for comments, suggestions in improving this discussion paper. After this webinar, we would request all the participants that in case you find, and we will also deliberate some of the things, and then everyone should give their own suggestions, comments online on IIIPI. Anandji, anything regarding the objective of this today's webinar?
I think.
Would you like to add before
Sure.
Our PPT?
Sure. A very good morning to all the joinees here. Thank you, Anilji. I think you have very aptly put it. The law puts a lot of onus on the IPs in terms of looking at transaction under 43, 45, 50, and 66. And sometimes these responsibilities are onerous, and the support and the challenges that are faced in unearthing these kind of transactions is a bone of contention or is a problematic area for many of the IPs. And looking at that, I think this discussion was initiated by the IIIPA or IPA, and the exposure draft that they have come out with points out a lot of things which we will discuss and which will inform the joinees here as we run through the PPTs. So that's a limited point. Let's look at what are the challenges and the solutions to in the process of identifying these and then making application and the related issues.
So I believe now we can share our PPT. So collectively we would go ahead with this kind of deliberations. So Anandi, as we understand that this particular draft was issued, and I received even a reminder also from IIIPI, and that was in the beginning of this month, almost on 7th of December. So still they are asking for comments and suggestions. So see, when we see the total discussion paper, so we actually see that there are topics that they have bifurcated. Of course, introduction, the challenges which is being faced in the entire process of determination and finally getting an order, solutions, recommendations, forensic accounting and investigation standard which they are proposing, suggestions and other measures to enhance effectiveness. In fact, we thought that we would be able to cover some of the judgments, but in fact, we saw that the judgments are huge. only 2 or 3 judgments we will cover, but then we'll have a separate webinar on focused on all the judgments so far from NCLT, NCLT, and High Courts or Supreme Court, so that we will come up with a separate webinar. So going forward with the topics of discussion, which is covered in the draft. So as far as the introduction is concerned, it's like it is regarding the preferential transactions, undervalued transactions, defrauding transactions, and extortionate transactions. And the section like preferential transactions are covered under section 43, undervalued transactions are covered under section 45, and also some kind of transactions are covered under 49 with some fraudulent intent. Extortionate transactions are covered under section 50, and then defrauding transactions are covered under section 66. So the look back period is defined. However, we have seen very recently that for section 66, there is no look back period, and we have seen a couple of orders from adjudicating authority where it has been now very clear that there is no look back period for section 66 applications. So Anandji, you can actually start with the challenges which are faced by the resolution professionals. You are also a resolution professional. I am also a resolution professional,
Yeah.
and we both interact with all our partners. Like when I say all our partners, we have 25 designated partners, and about 7 are likely to be added in the designated partners list. And there are about 50 partners, those are associated partners. So we, as a senior partner in AAA insolvency, we interact with all the resolution professionals who are appointed and associated with our company. So Anandji will deliberate the challenges which are written by the IIIPI, but then we will add our experience along with this. Yes, Anandji.
Sure. See, instead of going in the sequence which is put here,
Yes.
just to add from a practical perspective, the biggest issue or challenge that is faced by any IRP or RP is the information availability and cooperation from the promoters or the directors whose powers are suspended. See, the issue is if you were to appoint a transaction auditor, the quality of audit report is going to be as good as the information underlying that is provided to him. So the biggest challenge that one faces is availability of information and quality data, because that's most of the time is not able to get it because of, in spite of filing 19.2 application, which takes time, 92 for non-cooperation, which takes its own time to get disposed or get heard, and any direction given under that application by the adjudicating authority. The issue remains that if the CD promoter or suspended directors are not cooperative, the quality of data that you get is either available or not available, or very patchy data or reconstruction that an RP or RP's team is able to do from the available public sources. So lack of information or availability of getting quality data is priority. I mean, that would be number one, according to me. The second is also limited funding, because most of the time the COC looks at an L1 instead of taking the whole thing constructually, that given the situation, given the kind of operations or complexity of the operation of the CD, we would need an auditor who's much more capable, but because of the general practice which is followed, the funding option becomes limited, and your ability to appoint more relevant or more qualitative auditor corresponding to the requirement of complexity of the business gets somewhere a little compromised. So that's where I said. The third point is, quickly, I'll just take 2 minutes. Third point is also the time constraint, because when you start digging and looking at a transaction, it takes time. And because of the time pressure, it becomes very difficult to somewhere get compromised. The qualitative part, that's one of the finding which group has also made. Of course, delays as NCLT. And the other point is that the legal provision stipulates that RP to have a clear ground to make that application and ensure that those grounds are mentioned for existence of any of these transactions, which because of all the factors here becomes very difficult many a times. And of course, the another challenge which is faced is after the CRP period is over, who is the owner of that continuing application? Yes, sir. Over to you, Anilji. Next section. You are on mute, sir.
So these are the challenges which are listed by IIIPI in the draft document. Yes, what we can add is the resistance from the promoters in providing information. Also, some kind of lack of understanding in some of the auditors. So they have to classify the transactions in different sections. That is an overlapping kind of a situation. Section 49 and section 66 are a little bit of overlapping, so that clarity is also not there. Also, as a lack of judicial pronouncements so far, and the path is not really very clear. So the outcome is not really good. Now let's see what is the suggestions that they have included. So of course, first is very important that the adjudicating authority capacity may be improved, and the more benches and more staff should be and members should be there. And also the information available should be the kind of RBI also, although this kind of amendment has already been made in regulation 4, sub-regulation 3, with effect from June 22, that the creditors are now under obligation to provide all the information to resolution professionals, and that information includes stock statements, stock audit reports, any kind of internal audit report, any kind of inspection report, any kind of forensic audit which has been conducted by the lenders. So then the financial statements, so valuation reports, all that has already been amended. So I believe this item can be removed from the suggestions because this has already been done. And the law also provides to some extent that the RP has to determine in prima facie, but then it is very clear the RP cannot adjudicate. So RP has to, based on the information available, facts available, the RP has to just point out, and then it is the duty of the, it is the jurisdiction of the adjudicating authority to finally pass an order, whether it is a transaction under section 43, 45, 50 or 66, or it's not. Then in some of the cases that we also find difficulties, that the committee of creditors are not accepting the fee of the proposed auditor. They do not approve, and the RP is under obligation to get the fee approved from the committee of creditors. So this is also a hindrance. So the IIIPI is saying that the funding has to be provided. So this funding is not restricted to only the auditor's fee, but I think this overall directions to the committee of creditors should be there to provide funding for the process. Separate funds would be, so the separate funds in any case, that has to be done in the resolution plan. If a resolution plan is approved and the any proceeds out of the avoidance transactions is not a part of the resolution plan, so that would stay with the RP, or the provision has to be made in the resolution plan who will attend to these litigations, who would attend to the outcome and how the outcome or any proceeds would be distributed. That has to be provided for in the resolution plan. Then the resolution plan will be approved, and accordingly some funding also has to be earmarked. So these are good suggestions, and the suggestions also continue that the 19.2 application should be disposed of quickly. Then assigning of the avoidance transactions, that like it cannot be, it can also be considered as under regulation 37 capital A, like NRRA, not readily realizable assets, and their assignment also should have been possible. The assignment, if possible, then the market has not developed. Any any entrepreneur who is interested in taking the assignment by making upfront payment has not come up so far. So we have so many cases, so we are not having any person who actually will pay upfront and take the assignment of all these avoidance transaction applications. So then then some kind of section 213 of the Companies Act says that any kind of fraudulent transactions, any action cannot be taken unless there is an investigation. So the auditor's report is not considered to be an investigation. RP's determination obligation is not considered to be an investigation. So therefore, some of the applications were in fact rejected because of the section 213 of the Companies Act, which also provides for that any action for the fraudulent transaction cannot be taken unless investigated. So investigation can be done by any investigating authority. So we have seen that Ministry of Corporate Affairs is investigating in some of the transactions reported by us, and then they are filing a report so that the outcome is improved. So the delay in adjudicating authority, like it is also proposed that in case there is no reply coming or there is no appearance from the parties, that should not be adjourned. There should not be more than 3 notices, and then finally it should be decided ex parte. Then the documentary evidences which are presently being insisted by the adjudicating authority, that can be relaxed a little bit. And also the forensic auditor or the transaction auditor should also join the
proceedings.
Yeah. So now the recommendations are into 3 kinds, like the statistical analysis and the quality of forensic reports and the templates. So these are I think this is an important part, the statistical. So I think you can take up the statistical analysis of the so far,
Sure.
Whatever application has been filed, whatever kind of outcomes are there. So you can take up this complete statistical analysis of it.
Sure. See, what the committee found out, the study group, is that so far there has been 787 applications for avoidance transaction that has been filed before the adjudicating authorities. And these 787 applications involve a huge amount of money, which is 2.21 lakh crores, and which converts into an average workouts for each application works out to 280 crores, involving either preferential, avoidance, extortionate, or fraudulent transaction. Out of the 787 application which has been filed, only 73 has been disposed with a very relatively smaller value of 0.15 lakh crores only. And the average value of this is 207 crores. And there are still 714 applications which are pending as at the end of the gone financial year. Average time taken for the dispose application has been 323 days, and the ongoing application, which are still, that is 714, which are still being listed before the adjudicating authority, have so far exceeded on an average 793 days. One more finding is that majority of the application, have a combined. It is not, the application that has been filed are not for individual transaction under 43, 45, 50, 49, or 66, but they are combined applications. So that segregation is not there. I think quickly, before I hand it over to Anilji, on the quality and the suggestion. So over to you, Anilji, in terms of quality of the forensic audit report and the suggestions there.
See, I can also add a little bit of last part, that the majority of the applications are combined applications, whereas in case we see the directions of Honorable Supreme Court in the case of Anuj Jain, that was in the case of JP Infra. So they in fact gave directions that the typical transactions should be separately reported to the adjudicating authority. In fact, not only section wise, like it was very clear that section 43, 45, 50 or 66, all these applications should be separate, because the remedies are separate, because the evidences required are separate. So these should not be a combined application.
Correct.
They are directing that section 43, 45, 50, 66, 49 should actually go for separate applications. Not only this, for any significant transaction, even under section 43, if there are 2 or 3 transactions or 5 transactions, it is recommended that significant transactions should be filed separately, so that at least 1 adjudication or 2 adjudications should happen. So this is what is the directions of the Supreme Court. However, 70% of the applications are filed combined. That's really not, that actually will prevent the outcome. Because see, in case we see the respondents becomes too many, and in case there are 10 respondents, so then the kind of filing of the reply and filing of the rejoinders, that's what is called, proceedings would remain pending for years. So that's the very big reason for delay. So we would advise our listeners that every section application must be a separate application. However, for any significant transaction, there can be a separate application under the same section. Now, the quality of the forensic reports is also one of the issue, and this issue can be resolved. In fact, in many cases, the audit report, what we call forensic audit, or we call it transactional audit, it has been rejected by the adjudicating authority. And the primary reasons for such a rejection has been, let's first of all understand what happened in Punjab National Bank versus Carnation Auto India Private Limited. The NCLT held that where the liquidator filed application under section 66 on the basis of a forensic audit report, application filed by the liquidator was to be dismissed as forensic audit report was weak and improperly conducted. Now, most of the forensic audit reports or the transactional audit reports are comes with a lot of disclaimers and also limitations. When the disclaimers and limitations are too many, then the court can definitely say that this particular audit has not been conducted properly. Because in the limitations, the auditors will say that they have not been able to take interviews of the key managerial personnel. They have not been able to verify the information given by the RP. They have taken some information from the third party which has not been verified by us. The books of accounts given to us was, we were not sure whether the same books of accounts are maintained by the company or some different books of account of the company, because there is no matching financial statement available with us. So these kind of disclaimers, in fact, disturb the quality of the forensic audit reports. Now, in the case of Jayesh Sangrajka versus Divine Investments, the auditor in the report had not categorized any transactions as fraudulent under section 66 of the code, and the applicant, means RP, had not even furnished any forensic audit report for the perusal of the bench. It was mentioned in the application that the forensic audit report gave him a reasonably strong hints of vulnerable transactions or other transactions that may be either regarded as breach of applicable law or deleteriously of interest of the creditors or stakeholders or otherwise transactions not designed to be in good faith. The honorable bench observed that the basing merely on the hints, it cannot declare the said transactions to be fraudulent one. However, my understanding is slightly different. My understanding is that nowhere in the code, nowhere in the regulations, it has been mentioned that RP is under obligation to appoint a forensic auditor or a transactional auditor. So that is not provided. It's a tradition only. It is a only tradition. And also, it can also be said that RP is trying to shift the responsibility to a third party rather than doing it himself. Even otherwise, the ecosystem of the insolvency law is that not every RP can be expert in accounting or forensic audit, because even the engineers can be an RP, even the management experts can be an RP, even the company secretary or the lawyer can also be an RP. So therefore, it is a tradition that the transactional auditor would be appointed. However, it is not mentioned in any of the regulations or the code. So in case an RP identify a transaction with some evidence that this transaction is covered under such and such section of the code, then the adjudicating authority should have respected that finding and should have adjudicated it, rather than saying that it is not a hint. But then even if there is some circumstantial evidences are available, and then the further investigation can be done by the adjudicating authority and appropriate order can be passed. So the RP or the liquidator should apply his mind and exercise his discretion while considering such audit report for forming an opinion and determining the PUFE transactions based on the reasons to be recorded in writing while filing this application. So I definitely agree that there has to be a forming of an opinion and also determination of the transactions. But then the basis can be his own study, basis can be the transactional audit report, and the basis can also be the circumstantial evidence is available with him. So also saying that the without audit report, the transaction cannot be reported, that's not something which is really correct. Now the Anandji, there is they have said that there is a possibility of a template of a transactional audit or forensic audit, which they are saying, and they are recommending also the to the Institute of Chartered Accountants to come out with such kind of templates, or even to IBPI. So I think you can take up the what kind of suggestions that they are giving in the template for the audit report.
Sure. What they have suggested is it's an idea which says there has to be a standard format or template for reporting any of these transactions. And basically, it is standardization of the process that the study group had in mind, and also simultaneously lay out the best practices that can be adopted to support these templates or support the kind of report that needs to be information or outcome of the audit that needs to be. And because of the standardization of the process and standardization of practices, all this is intended to bring a quicker turnaround and ability to finalize the avoidance application or the determination that the RP or an IRP has to do in a case becomes much faster, better qualitatively. Some of the suggestions that they have made towards the best practices or towards practices which help you unearth what kind of a transaction can be, sorry, can be part of, just a moment, can be part of, taking this. So here, one of the first thing that they have listed out is they have segregated the whole thing. Study group have segregated the whole thing into different kinds of situations or topics that a forensic auditor may look into to be able to arrive at or look at or decipher any of these transactions. The first one is And on the topic that they say is some of the indicative parameters and perception around which template or the best practices can be formulated. One of them is management's position to override controls. Now, fraudulent financial reporting often involves management override of control. Now, I can give you two practical situations quickly. One is in an companies usually have limits of authority. So the top management also have a limit that they cannot sign any expenditure or any transaction beyond a certain limit. Many a times one comes across that even though the limits are transgressed or overstepped, they are not reported to the board or they are not taken to the board of the company for ratification or for board to take a decision whether they want to ratify or they want to, take action against the particular person. So look at transaction which contravene existing policies where the management has overridden in their consciousness of, or towards the year end, a lot of journal entries have been passed. And this could be with an object of, making the results suitable to the objective that the senior management or the management of the company or partner LLP, they certain objectives they have. To achieve the objectives, the accounting entries are met, which is again an override. Certain assumptions or judgments made toward estimating account balances. So two examples. One could be assumptions towards revenue recognition. The second could be assumptions while making the provision for expenses. So those could be underprovided to show better profits, or the assumptions on revenue could be tweaked, overridden from the existing policy to show better revenue. Or there may be chances that omitting, postponing, or delaying recognition of financial statement or expenses, which could, in normal circumstances, should have been there. Or if there are certain expense or other items which are contingent on certain facts happening, concealing or not disclosing those facts. There are also methods override happens entering into complex transaction, which is, which tries to misrepresent the financial position. Could be a lot of entries of sale, purchase shown between related parties or subsidiary holding company cross-border. Those can also try and, manipulate the financial performance and give that, those transaction becomes an underlying factor to study whether any override has been done by management, altering records for any unusual transaction, etc., is another point. The second point that comes to misappropriation of asset. So look at the assets of the while performing an forensic audit. Look at the asset or while RP determining through the transaction, look at transactions which would represent misappropriation of assets or theft of asset. So it can be done in many ways. Receipts. So customer had to give money, take some part of it in cash or take it into a different account. Physical asset. I mean, one of the key example which comes to my mind, companies have a practice of doing a lot of marketing and promotion. And to undertake these marketing and promotion, they come out with various kind of, something like gifts, presents, or branded pens, which are expensive pens, branded, or sometimes people use coins, silver coins, which are branded in the company's name. And one may come across from experience Because these are marketing materials, these assets are smaller in size, which can be easily taken away physically. Any lack of control, and there are many cases one can come across where these assets are embezzled or taken away by either people overseeing that or people who can lay their hands on. There are certain cases where you'll find that goods and services have not been received. And because of slightly poor controls, where corresponding entry into the stores, entry into the registers, and clearances, and then the payments happen, the payouts are made without any this thing, or using entities asset for personal use.
So I can also add certain
Ji,
examples of such transactions, Anandji.
ji, ji.
Because in my experience, I have seen at the year end, some of the
Mhm.
debtors are being adjusted with the creditors by way of journal entries.
Correct.
Some
Mhm.
uh, some of the uh, debit notes issued by the customers are not disclosed to the accounts team and to the auditors. Some of the disputes regarding the prices is not disclosed and the books are showing the receivables.
Higher.
Some of the rejections, some of the damages, some of the late delivery charges, which are normally charged by the customers, are also not brought to the knowledge of the accounts department and also the auditors. So these kind of various, I mean, as I'm saying, omitting or postponing or delaying the recognition in some of the transactions in the financial statements is very largely being done
Correct.
in our country.
Yes. Even one of the things is stuffing the channel, which means you have, it's like FMCG company, you have distributors. You just raise the invoices on distributor, come to an understanding, the senior management, and don't ship the goods. The goods are still lying for 15 days, 20 days, and then ship them as per your convenience. As
Right.
at the 31st of March, taken into revenue. So many practices you rightly added, which is done, which may be looked at to unearth.
In some
And
cases, we have found that the cash has been received from the customer, but it is still being shown in the books of account as recoverable. And those are individual customers which are not even locatable. So they would come to your store and buy something, but instead of receiving cash, they would show as if the money is receivable. So that kind of financial statements and accounts also we have come across. We have also come across where the stocks are artificially uh, increased in value only to reduce the losses or only to uh, show some positive working capital to take loans from the banks. That also have been seen in various cases. See, Anandji, you have already touched about the misappropriation of the assets, and further the IIIPI is recommending that the auditor should make inquiries from the management and others
correct.
the entity as appropriate to determine. See, like once we see the practical experience of more than 280 cases, out of the 280 cases, maybe that we have 210 CIRP cases, and we haven't seen that the any of the key managerial personnel or any of the director is responding to the queries of the auditor or the queries of the RP, because they can ask question and it is their sweet will whether to answer or not, because there is no enforcement like the CBI doesn't has power, or like the so there is no enforcement powers with the RP or with the auditor. So it is all kind of whatever the answer they would give, either we take it or we leave it as absurd answer. That's what is the practically that we are doing.
It's
So
rarely answered.
yeah, it's
It's
really
never,
answered.
I have not come across where any answer to any audit queries as far as transaction audit is concerned comes from the promoters. Never.
Absolutely, absolutely.
Mhm.
So the when I think the IIIPI is also trying to say that the auditor should see the transactions looking into the business rationale. So the it is really very important that the auditor must understand the business first of all. The entire business model will make a better understanding of the books of account and accounting entries. So the recommendations are that the misappropriation and also the fraudulent transactions. So the focus should be on the transactions which are overly complex, and also the management is not discussing the nature and accounting of such transactions, and those charged with the governance of the company, they are having inadequate information or inadequate document. That's what I said, that the accounts department or CFO would not be disclosed any kind of such transactions. So the management is also at times emphasize on the particular accounting treatment, uh, which might increase or reduce their profit or net worth. Transactions where the related party consolidation is required to be done, so that also can be evaded. So these are the various business rationales which for the significant transactions. So I think you were taking up this misappropriation of assets. You can take up this again, because this is again a little a larger version of misappropriation of assets as recommended by IIIPI. Anandji.
Sure. So some of the following reasons also, the reasons have been listed as indicative of misappropriation of asset, which an auditor needs to look at. Personal financial obligation may create pressure on management employee, which with access to cash or other susceptible to theft to misappropriate those assets. So it just saying if there in the matrix of the company's performance, if there is pressure on the management or employees to show better results, they may indulge into. And also if they have personal financial obligation that we know, that could be another pressure on them to, misappropriate cash or assets which they have a holdover or they are supposed to take care. Inadequate internal control over assets may increase the susceptibility. So one of the key points one has to look at is whether there is an adequacy of control. What we discussed earlier, that uh, all these assets which are bought for marketing or distribution, say a company buys 50 sets of the Schiffer pens, and it is just left in the control of the manager, whether he's giving to genuinely intended customer or he's giving it to his friends and relatives, or he's taking out, keeping at home. So the control, one has to look at what are the controls for issual of these assets. Smaller business, the owner himself would put a control on it by keeping it under his custody. But in companies, if these are under control of management, then the issue is to be looked at whether the policy or the internal controls are there. Also, look at the checks and balances, whether the same person is responsible for taking the goods into the stores of the company and also passing the payment vouchers, etc. Then that's an inadequate segregation. Senior management expenditure, usually travel and reimbursement. So whether the senior management is traveling for personal purpose or for business purposes is something which the policy has to have a clarity, and one needs to look at that very clearly.
Right, right.
Yeah. And record keeping aspects.
Right, right.
Another thing is timely and appropriate documentation of transaction. Like if the goods have been returned, whether the credit note has been issued or not, or if damages are there, those damages and the credit note resulting, into the damage has been done or not. Also, one of the things is inadequate management understanding of information technology. I came across a case where good controls were there, but the management did not understand the complexity of ERP. So the company had created credit limits for each of the customer. So if any new order and if the payment was not there for the previous orders from the customer, then the credit was not available. So you couldn't bill the customer. However, the IT guys, along with the sales guy, could manually override that in the system, ERP, and the billing could be done to those customers. So management understanding of information technology that they're using is important, and there should be proper access to automated records. That's a key one. I think, Anil, the related parties you can take.
Yes, I think this related party is a very, very important suggestion from IIIPI, and records or documents that the forensic auditor may inspect regarding the related parties and how to unearth related parties. See, even before I start this, we use two softwares for unearthing the related parties transactions, or rather related party entities. One is the probe 42 and the other is uh, case scan, which provides us some information about the related parties. And that can be based on the cross directorship, cross directorship of past directors, common key managerial personals, common domain name, common email ID. So that way, those softwares are helping us. Now, even this income tax returns or even Form 26AS or annual information statement also will provide detail of the transactions. And also it is also the duty of the statutory auditor to provide a list of related parties. Now, in some of the information is required to be given to stock exchange. In fact, the other day I was trying to find out. So the answer came from the resolution applicant that we are we are a listed company and we submit the related party information to stock exchanges and to SEBI so that the internal trading is avoided. So the shareholders register can also provide some information where the common surnames or the common addresses are used. So the statement of conflict of interest from management, it is required in some cases. So that also can be seen: investment, pension plans, contracts and agreements with the key managerial personals, and those charged with governance. Those charged with governance means anyone who actually is having key position in the company is considered here those charged with the governance. Specified contracts, the specific invoices, and see, like there are some professionals advices advices. So for seeking for in understanding the information about the disputes, we should understand the invoices from the professionals, lawyers. So in case we will see those invoices, we will come to know the disputes of tax disputes in various courts, disputes. So the invoices from professionals is something that actually can be very important. Significant contracts renegotiated before the insolvency starts, annual or internal audit reports, documents associated with the filings of the entity, like the prospective kind of a thing. So the complex identification of significant transactions outside the normal course of business, that also has to be unearthed by the auditor. So like complex equity transactions such as corporate restructuring or acquisition, transactions with offshore entities in jurisdiction with weak corporate laws, the leasing of the premises or the rendering of the management services by the entity to another party if no consideration is exchanged, sales transaction with unusually large discounts or returns, transactions with circular arrangements, for example, sale with a commitment to repurchase, transactions with contracts whose terms are changed before the expiry. So before the insolvency starts, there are many things that people are doing. One, they are taking advance for the next 2 years from the tenants so that the RP should not have access to that rent because the rent is already taken in advance. So they also kind of change various contracts of lease. They can increase the rent in sometimes. Also, we have seen that before this insolvency starts, they can enter into a kind of O&M agreement. So various kind of agreements can also provide us the details of the related parties and related party transactions. In fact, the IIIPI has actually suggested that there should be a forensic accounting and investigation standard that may be developed by IBPI. And this would ensure uniformity and consistency in the input and critical for better outcomes. And it is also saying that the standard, that the forensic accounting and investigation standard should provide for some of the following uh, guidelines. The professionals with the minimum standard for undertaking forensic accounting and investigation engagements, that would be provided, that should be provided. The users of the standard with an indication of the quality of services that can be expected from such engagements, the regulator and the government agencies with an appreciation of what can be expected from forensic accounting and investigation standards or services, general guidance on the matters of implementation and related practical issues. Now, Anandji, the forensic accounting and investigation standards is
G.
continuing. This is also
Yeah.
kind of, this also can be considered as part of the code of ethics. So we have to take it little quickly because we have only 5 minutes.
No, I think, yes, I understand, Anilji. What I will do is I'll quickly say, because code of ethics is very focused and applicable to only people who will indulge into forensic accounting profession. So quickly, what it says, just like some of the things, just like IPs, that they have to be independent, they have to ensure integrity and objective, take professional care in terms of whatever you're delivering and not be negligent, and create no misunderstanding, ensure confidentiality of the information and the privacy rights of the CD that you're doing. Do not, skill and competition is competence is important. Do not take any engagement which is not in line with your competence, and any engagement that you do is in the context of the situation. That is important. And all, the most important thing underlying any professional work that you take is to ensure that the primacy of truth prevails, that you are able to unearth the truth. Also, it is important for you to respect the rights and obligations of all the parties involved. There, it is important in your report to bring out the facts separately and not to place too much of, not to place your opinion there, to separate the facts from the opinion from others also. They should indulge into some kind of a standardization and practices so that the quality and continuous improvement in quality happens in terms of, undergoing some kind of a standardization of documents, initialing everything, uh, keeping a record of all the meetings, and so that the expected outcome is in line with the objective. And they should clearly identify all key stakeholders, individuals cover under the scope, and have an engagement report. Be very clear about this. They should also seek power to engage other professional, maybe IT professional or other, if they need to do in their uh, 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 area of work while performing the forensic audit. And they should clearly seek authority to engage anybody. And then they must also get enough this thing that using whatever reporting that they have done, they should be able to testify before a competent authority on their report. And one of the key things while they're making report is important that all the engagement that they're making, they should not indulge into any kind of opinion forming or judgment. What they have to very clearly highlight is the key assumptions that they have made. If they face any limitations, that's what it is. No opinion to be expressed or pass any judgment on guilt or innocence. That is the job of the judiciary, or the adjudicating authority will adjudicate on it. The facts and the evidences needs to be brought very clearly without passing any judgment on them. That's what the reporting has to be done. I think let's, Anilji, quickly run through the additional suggestions, and then we can
So
go towards the judgment.
we can do some kind of additional suggestions. The additional suggestions from the IIIPI is that there is a need for guidance, and that is continuous guidance to RPs and the auditors in the context of the avoidance transactions. Guidelines should be made available for fixation of minimum fee for the forensic auditors to ensure quality and independence. Certificate course training programs can be developed. Minimum 2 days training program should be made mandatory to be attended by any professional who desires to undertake any PUFE transaction audit assignment. Specific focus on drafting application and presentation before adjudicating authority may be emphasized while imparting such training, and weightage to forensic skills know-how in granting CPE credit under additional criteria should also be rolled out. So the mechanism to review the observations made by the forensic auditors also is provided, like it is. The IBBI should also put in place a mechanism to review the observations made by the forensic auditors contained in their audit report. And other measures that they have suggested is the avoidance proceedings should be permitted to be commenced by the creditors, and in some cases, like in case of avoidance transaction, it is still permitted by the it is permitted that even creditors can file an application. So the consent of the IP is required but not obtained. The creditor COC may be permitted to or the court approval. So these are the some kind of the additional requirements. So we are not taking up the judicial pronouncements on this. I started looking at the judicial pronouncements. So there are about more than 20 judicial pronouncements, or even more than that.
More than that.
Under section 43, 45, 50, 66. So we would be preparing a separate webinar for on the adjudications. We will also highlight the contradicting orders, so for the benefit of our viewers and listeners. So with this, Anandji, first of all, thank you very much for joining, and also thanks to all the participants for remaining with us over a year now. I think this is about, we have about almost 39th week that we are going ahead with continuous. Even before that, we used to do a lot of webinars, but then this is a continuous process without a break. It's about, so we very soon we would be achieving 1 year of continuous webinars. I think this is all with the blessings and with the love and affection that our viewers and listeners show on us. Thank you. The webinar is concluded, and we'll again come on the next Saturday at 11 a.m. Thank you. Thank you.
Thank you very much.